Stan, what's the big deal about guaranteeing fixed closing costs at the time of the good faith estimate?
Well, the problem this country's experienced with the lack of transparency was that people were given estimates to go out and shop for a mortgage, and it just really becomes a very uncomfortable, almost impossible thing to do. So I felt that if we could provide all of our clients with fixed closing costs, guaranteed closing costs, for the same rate, same program, there's no reason why they can't shop. And when they shop, they can probably end up with a better deal for themselves.
Okay, so you're saying that it eliminates surprises, I guess, at the closing table.
Absolutely.
So when you're able to say, this is what our good faith estimate says, you can mark our words, it's going to be to the penny at closing what we're saying it is today at the good faith.
We actually sign off on the good faith estimate as a guaranteed fixed cost, so it's right on there. They're guaranteed to receive those costs to the penny, like you said. It's like any other product. People are going to walk into a store, into an automobile dealership and buy a car. They don't want an estimate. They want to know what it's going to cost them when they leave the showroom. So that's exactly what we're doing for the mortgage. And again, with the same rate and the same no prepayment penalties.
Now, doing that, how can you guarantee to fix those closing costs at the time of the good faith and still beat any written offer they may bring from a competing lender? Doesn't that cost you money in some cases?
Yeah, that's part of the issue we had to deal with, because obviously there's no way possible we know what those costs are up front. But we know we guarantee to them. So what it creates is a credit to the borrower at the final closing statement. So if our quote was $3,600 and the actual costs were $4,100, for example, there'll be a credit for $500 because the client will never pay a penny more than what we guaranteed them up front.
Okay.
As far as matching, sure, there's times where we quote $3,600 and the client finds a deal for $3,300. Well, this is $300 that potentially we're going to lose, but we make it up in the volume through the deals, through the number of deals. We don't want the client to get anything other than fixed closing costs. We don't want them to be baited and switched somewhere else for our trusted advisors. So we certainly do provide them and guarantee the $3,300 figure. Occasionally someone will bring us a figure of $1,800 where we quoted $3,600. Well, we know that's not legitimate, and we can disprove the legitimacy of that. So
now, obviously in the mortgage industry over the last couple of years, there's been, and rightfully so, tons of bad press on terrible ethics and the mortgage brokerage business has had kind of a negative reputation. How do people know that their clients are going to be taken care of, working with you and REP, and that your operations run by people with not only experience but the highest ethics?
Well, I mean, it's many parts to that question. We know and recognize, and why we created the program in the first place, that there's a lot of unscrupulous people in the mortgage business, or had been. They were looking out for their best interest, not the client. They hid behind these good faith estimates, which had no enforcement whatsoever, so they could quote one low figure and then double, triple the figure and get away with it, because what are the people supposed to do before closing? My background is I've been in the business for over 25 years. You can check my credit standing and my credibility in the mortgage industry. But it's really quite simple. The company has a license. We have to protect that license in the state of Florida at the present time. We're working on Georgia shortly. And in that license, you have to conduct yourself ethically, morally. But what protects the client is the guaranteed fixed cost for the same exact interest rate they're going to get from someone else. So we encourage you to have the clients shop around. We don't shy from shopping. We want them to see how good we are. We want them to see that no one else offers good fixed costs, so that they can come back, feel comfortable that they got the fairest deal of all, with no surprises. We locked it in. We locked in the interest rate. It's a win-win-win across the board.
And expanding on that and doing everything in the client's best interest, from what I understand, you only put clients in the loan that makes the most sense for them in their particular situation, correct? Such as fixed mortgages.
Yeah, I mean, back in the day when people were doing these subprime and these interest only and these option arms, my company, we didn't do any of those kind of loans whatsoever. It didn't make sense for most people. So there's a financial planning aspect to a mortgage that we encourage, and in order to facilitate that, we decided the people that the clients, the borrowers will be talking to will be underwriters.
Mhm.
They won't be underwriting a loan, they'll be originating the loan. Their only interest, their salaried people, is to make sure that people get absolutely the best deal and that it makes the most sense for their individual circumstance, whether it be a 15-year fixed or a 30-year fixed. Interest rates are a little lower on 15, but most people opt for the 30-year. So we're definitely taking into consideration their financial picture, so to speak, and making sure the mortgage fits their financial picture.
You know, and now that we've talked about a lot of how the basis of REP and how the clients are taken care of, the premise of the website, repmortgage.com, is to bring in what we call trusted advisors into our organization. Tell me a little bit about that and how you came about wanting to bring in trusted advisors to take care of their clients and their mortgage needs.
Yeah, good question. We knew in developing the concept that this was the best mortgage that anybody could possibly get their hands on because it allowed for transparency, fixed closing costs. We guaranteed to match any of our competition. So as a matter of how do we get the word out, how do we create awareness about the program? And I decided that we could do a direct marketing campaign at a certain expense, but I started thinking, who is it that the borrower is going to look for advice on who to go to for a mortgage? And typically most people have a trusted advisor, be it their stockbroker or their financial planner or their CPA or their real estate attorney or their realtor in most cases when they're involved in a purchase transaction. So I felt, why don't we reach out to the trusted advisors of the world, the people that have the best interests of the clients, so these are the professional trusted advisors, of course, and work with them to affect reaching out to as many people as we possibly can. So that's what we elected to do.
And once I become an official shareholder of REP, what is that compensation structure and how exactly do I get paid?
Compensation has to be paid by a W-2. There's no 1099s. The laws require a W-2 compensation. Therefore, we have the employment agreement. You will be receiving 50% of the gross revenue generated after we've credited your borrower to give them the fixed closing cost and the matching of the closing cost. We anticipate the average mortgage transaction will generate about $3,000 to $4,000 of gross revenue after the credit. So the partner's share would be $1,500 to $2,000. And knowing what your next question is going to be, do I have to participate in the financial remuneration of the transaction? The answer is no. If you so choose, you can give the money to the client as a reduction below the fixed cost so they get a super terrific deal.
Okay. So an example would be is if I had you know, a client or clients and sent them to you for the mortgage, and my compensation, let's say on the deal, was $2,000. For whatever reason, I decided I didn't want to take that compensation. I could say, Stan, I don't want the compensation. I'd like to further benefit my client by reducing their cost by what my compensation would have been, and in this case $2,000 would be deducted from their closing costs. Is that accurate?
It's accurate. In practice, though, very few of the partners give their clients the full compensation. They need it to offset the loss of revenue in their
Right.
businesses at this point in time. I would like to believe that in the future more people will do so. So what they do instead is they promise to match the best deal the client can find when they shop with our figures as fixed costs, and then give them maybe a credit towards the appraisal or a $500 reduction so the client receives this big benefit. But as we all have found out in the last 2.5 years this program's been in existence, the client's looking for the protection. They're looking for the transparency, which only we can provide. So there's no surprises, and the client loves having their trusted advisor involved in the transaction.
Now, I've got all the information, you know, on REP from each, you know, from a transactional basis to a corporate distribution basis. How do I sign up?
Simple. On this website, there should be a button you can click. I'm not quite sure. I'll have to check with Kurt. But just go ahead and click on that and register your name. You'll start receiving our emails. Explains the program, explains what happened in the last week and what we expect to happen in the next few weeks. Start being aware of our program. Click on some of the tutorials. Click on some of the other aspects of the website. And but just register. Make sure you're getting on our email list. That's probably the best way to start.